Good evening, VV Nation. My name is Ryan. Welcome to the channel. Now, tonight's presentation, I got a good one for you. It's one of my favorite stocks in the bad database. And no, I'm not talking about AMD. It is a semiconductor company, though. And tonight, we're going to talk about ARM Holdings. This is a pivotal company in the AI revolution. They have a monopoly essentially when it comes to smart consumer device computer chip market, over 90% of that market share. And there's actually two big announcements coming out recently that has propelled the stock. Has been on a move recently over the last two trading days, actually moving up quite a bit today. Big body candlestick, breaking a level of resistance. So tonight's presentation, we're going to take a look at exactly what's going on with the stock, what's the news driving the stock higher, and then we're going to jump in the VectorVest 7 system, take a look at our proprietary indicators, and see how they match up. All right, big event coming up. We got the Las Vegas two-day investment seminar coming September 20th, 21st, 2025. You can achieve the VIP experience in person. Just go to vectorvest.com/Vegas to register now. Now, one big thing that's came out recently that's giving me some optimism when it comes to ARM's holding is, look, they're moving into the chip manufacturing space, right? They're a fabless semiconductor. A lot of them are, right? A lot of them use companies like TSM to manufacture for them. But as we take a look here, ARM Holdings recently reported lackluster earnings and a weaker than expected forecast, leading management to announce a major shift by moving into manufacturing its own chips in addition to its core licensing business. Now, the transition, new risk, right? Complexities. Semiconductor chip fabs can be very complicated in nature. So, they're about to pivot towards chip manufacturing could significantly impact its established investment case and longer term growth outlook. I like the fact that they're moving into their own manufacturing. As you can see here, to be a shareholder in ARM Holdings, you need to believe in its ability to maintain high margin growth through widespread adoption of its CPU designs and expanding opportunities into AI and edge computing. The company's recent shift into chip manufacturing comes after underwhelming earnings and a weak outlook, right? So this is all about increasing the margins for this company. And if you've been looking at the stock over the last 2 days, it's been shooting up, and this is the reason why here. More personal AI delivered on consumer devices with ARM's new Lumex CSS. That's right, they've just come out with a new platform for personal devices to enhance AI assistance. You can see right here, unlocks real-time on-device AI use cases like assistance, voice translation, and personalization with new SME2 enabled ARM CPUs delivering up to 5 times faster AI performance. Now, this is the one caveat with ARM Holdings. It is a growth stock, and it's currently trading at a premium right now. You can see ARM Holdings faces market scrutiny over steep evaluation. I've been talking about this for quite some time with this position here. Now, ARM has fallen nearly 15% in a month as analysts question its steep valuation. Now, 2026 earning downgrades add to bearish sentiment. We just talked about that, right? Weak earnings. The company's trying to pivot to fix this margin problem. ARM trades at a PE ratio of 138 and forward PE near 70, far above peers at 33. We'll jump in the VectorVest 7 system and take a look at the valuation of this company. Now, this is what I want you to know about this company. I've talked about this before in the other videos I've done on ARM Holdings. Been a while. Now, I will say this, ARM Holdings, near monopoly with over 99% market share in the global smartphone CPU core market. The reason why they're ahead of the curve, right? Their competitor, x86, so this is a joint venture by both Intel and AMD. ARM's architecture is much more energy efficient. That's why it's in smaller devices, right? Now, if we think about that, take a look at this. Projecting it will reach 50%. This is the data center CPU market share, right? It's aiming for 50% share by the end of 2025 and only up from 15% in 2024. So it's planning on expanding its AI footprint. And I find it very interesting because if you think about it, their computer chips are more energy efficient. That's why you find them in consumer devices, right? What's one of the biggest problems AI data center has right now? Energy consumption, right? So this company can help lower some of this energy consumption demand so that way the AI revolution can continue to grow. So let's go ahead and jump in the VectorVest 7 software and take a look at our proprietary indicators and see if the stock makes sense. All right, let's use the VectorVest 7 system to break this stock down. First thing I want to say, look, price action 157. The optimism still there today, up almost 2%. But my concern here, look at the valuation. We only buy the stock at $40, so it's currently trading at quite a premium right now. And if we take a look at our proprietary indicators, RV, RS, and RT, looking at the fundamentals with relative value and relative safety, the company is a speculative play here, not sound fundamentals at all. The only thing in its favor right now is going to be the price trend, or RT, relative timing. Being above 1 means that the trend is in favor of the bulls. As we take a look here, VST, overall value, safety, and timing, just meeting the threshold of favorable territory here. And if I scroll over to the right, we see the forecasted data, sales growth rate 12%, earnings growth rate 25%. Not a bad stock. Just, looking here, looking at the VectorVest 7 system, it's telling me to focus more on the technicals rather than the company's fundamentals. So let's take a look at the chart and see if the chart is making sense. All right, just taking a look at the chart here. Down below, we have RT, relative timing. Again, this looks at the short-term price trend. We have earnings per share, EPS. This is forecasted data, the leading 12-month forecast. In addition to that, we have earnings growth rate as well as sales growth rate going forward. I will say this, forecasted data declining over the last 12 months. Not something I'd like to see with this position. But look at growth rate and earnings, 25%. Sales growth rate coming in at 12%. Still double digits respectively. But again, it's going to be more on the technicals here. And as far as this trade, this is the level I'm looking at right now, 152. You see price action stopped there yesterday. However, that momentum picking back up today, clearly breaking my zone here at 157. So if this is a position that you're thinking about getting in, this is kind of where I would, put a stop in, or at least get more defensive if it broke below around this 152.69 level. But some optimism for the bulls right now. Look at RT relative timing, climbing back into favorable territory here at 1.31. So again, this is exactly why I want the stock to be on your radar. A lot of technical indications showing momentum for this position. And if we look here, the 20-day EMA is getting close to crossing above the 40-day at 141.89. The 40-day EMA is at 142.21. So there could be a potential shift in momentum if that 20-day can get back above the 40-day and give more ammunition for the bulls. And I hope everybody enjoyed tonight's presentation. If you did, hit the like button. If this is your first time watching and you found it informative, hit the subscribe button. And I'll see you tomorrow evening. Good night.